Hello and welcome to Let's Invest Right. Guys, if you haven't subscribed us yet, do subscribe and press the bell icon. So whenever we upload a new video, you will get the notification. Guys, today we are here to discuss about three companies which pays out really good dividends. So first of all, let me tell you what are these companies, what are those companies actually who pays out dividend, what kind of stocks are those, and what are the benefits of having such companies which pays out regular dividends. So guys, first of all, we have got some companies which are growth companies. Those companies are normally not paying out any kind of dividends, or they don't share their profits with their shareholders, but whatever earnings they have, whatever profits they have, they would reinvest them, and they would look for growth perspectives, and they will further grow their positions. Now, such companies would give their investors capital gain, that is the price at which they will buy the stock, the beginning, and at the end when they will be looking for the realization of their profits, the stock price would be appreciated and they will get capital gains. Whereas the other kind of investors, they don't care about the pricing. They'll invest in companies who are really stable. They don't have much growth potential. However, those companies are very stable. Their products are well known. They have got regular and very stable revenue streamline, and such companies normally you won't see their stocks really growing. So for them, they'll be paying out regular dividends to their shareholders, and also some of them will be seeing some capital gain as well. So the total gain for an investor would be the dividend which they'll be sharing with their shareholders, plus some capital gain in their stock if it's seen. But normally any investor would not be investing in that company by keeping this thing in mind, that they'll be having a really significant capital gain in the companies which are paying dividends, and their main intention would be to get regular income from those stocks. Now we'll be discussing three best picks from our list where we have invested our money, and we have done some quick research on those companies. They are very well known in their industry, and not only they are paying good dividends historically, but also there are some chances because of this pandemic. We have seen many industries stocks going really downward, and hence creating some opportunity for their investors in terms of having capital gain as well. So do watch us, and then you can have your own research before investing in these stocks.
Different investors have different strategy for investments. Some are ready to take the risk, while others, some want to have safer investments. Those who want to have safer investments identify stocks that not only give dividends but also have some opportunity of growth. In this video, we have conducted research and identified three stocks that not only give high dividends, that not only have high dividend yields, but also have good potential of capital growth. So if you invest in those, you'll not only get high dividend returns. These stocks are not only safe for your investments, but you'll get capital gain as well. So let's start.
So the first company in our list is GlaxoSmithKline, GSK. That company is listed in London Stock Exchange, as well as it has its secondary listing in New York Stock Exchange. It's a very well-known pharmaceutical company, and the best thing about this company is most of the drugs normally, which if you go to the doctor and they prescribe you whether for a normal fever or any infection, normally it comes from GSK. This is one of the top 500 Fortune 500 companies. It is one of them. And when it comes to its stock, let me tell you that it has got one of the best and the best payouts in terms of its dividend. So let's discuss about something from its graphs, and let's see where it stands. So guys, as you can see on your screen, this listed stock GSK in New York Stock Exchange, it was trading around $47.82 per share before pandemic. And with the major sellout in all the stocks across the world, we have seen this also depreciating, and it was in the month of March or April, before April, where it has seen a really major drop down around $30 per share as well. Right now, currently it's trading at $40 per share. If we see the analyst rating, guys, so it's in a buy range from the analysts, and we can see that the average price given by analyst is 47.27, and the highest we can assume is $53. Guys, in terms of some ratios which we are going to discuss here, is this company GSK highest analyst price, as we have discussed before, is $53. Currently it's trading at $40. So the capital gain which we can expect is 32.4%. And the dividend payout ratio of this company is 5.40%, which is one of the best in the industry. So the total return, if we calculate with the expected capital gain as well as the dividend payout ratio, so the total gain would be 37.8%. So when we are investing in such a good company, which is really a blue chip company and which has got a very reputable name in its industry, whose products are all over the world, and they are one of the best in terms of vaccines, in terms of drugs distribution. So hence we can say investing in this company, which is trading right now at $40, still we have got some potential where it can further be appreciated, and it can reach around $50 per share, and also it's paying a very good dividend ratio. So we would really recommend, and we'll be investing in this stock for sure, and definitely it will be a good choice to make. Thank you.
One of the companies in our list for high dividend and capital gain is Verizon. Well, Verizon is a renowned company in the telecom sector. When we talk about telecom sectors and dividends, At&t is the first company that comes to our mind. However, At&t recently announced a cut in their dividends. Many shareholders were not happy because they were investing or buying shares for At&t mainly because of high dividends. However, now many investors are focusing on investing in Verizon because of high dividend yields in the telecom sectors. As a telecom company, the company has been growing and increasing its number of customers. The company gives postpaid lines, prepaid lines, internet and other utilities. That's how the main business of the company is. Looking at the graph of Verizon company, the stock price, well, in December 2020, the price was around $62. Currently, the share is being traded at 57.16. So there's some potential around 8.6% if the price reaches to that level. However, if we talk about the analyst ratings, most analysts are saying to hold this share, while 6 of them are saying to buy. If you talk about the recommendation, it's around 2.7. So it's between buy and hold. In terms of price, analyst expects the price to reach around 66 as the maximum in the next year, in the next 12 months, while the average price is around 60.26. If the price reaches 66, you'll have a capital gain of 15.5%. On top of this, you'll get dividends of 4.4. So this makes your returns of around 19.9, approximately 20%, which is very good in the next 12 months. To add more about Verizon, for the last 14 years, the company has increased its dividends. So the shareholders are happy with the increased amount of dividends. Not only this, the market capitalization of the company is around 237 billion. This shows that the company is not small, it's a big company with the payout ratio of around 55%. So the company is not only retaining some of its earnings, but also paying out its dividends. So it's a balanced approach, which is nice because the company is looking to grow and investing in its future, as well as making its shareholders happy in terms of by paying dividend. The third company in our list, which will give high dividends and has a good potential of returns, is Enbridge. The ticker for this company is ENB. Well, it's a company operating in the North American markets, operating in the oil and gas industry. Companies that are operating in the oil and gas industry generally give high dividends. This company not only gives you high dividends, but has a good potential of returns as well. The company mainly operates into 4 segments. The main one is the crude oil pipelines. The second one is the natural gas pipelines. The third one is the natural gas utility. And the fourth one, which it is expanding is the renewable power or the renewable energy that we say. So these are the four segments in which the company operates. The first one, the crude oil pipeline is the major one, and it gives almost 54% of the earnings or the profitability to the company, followed by the natural gas pipeline, which gives around 29%. This is all about the company. Let's look at the chart and how the price have been fluctuating in the market for the company. Let's now quickly look at the historical price of the company. Well, in December 2020, the price was around $43, but after the COVID and the oil crisis, the stock price went down significantly in March 21. After this, the price has been improving. Currently, it's been traded at 39.69. The analysts generally recommend this stock as a buy. Like 1 is recommending as a strong buy, 6 recommend it to buy, while 6 are saying to hold it. So overall, the rating is around 2.3, with most investors inclined towards buy. If you look at the price, what analysts are saying, the current price is around 39.69. However, in 1 year, it is expected to go as high as 49, while the average price is around 41.66. If you look at the dividends and the capital growth, Enbridge capital gain, if the price reaches $49, which is the highest price of the analyst, it will have a capital gain of around 23.7%. And the company gives a dividend of around 7%. The dividend yield is around 7. So if you add the capital gain and the dividends, the stock return in 1 year, you'll have around 30.7%, which is massive. So this is one of the companies that we have in our list with high capital gain and high dividend yield. To add more about Enbridge, well, the company is one of the dividend aristocrats. Well, this means the company has increased its dividends in the last 25 years. To be precise, the dividends of this company has increased in the last 26 years. Not only this, the payout ratio of the company is 104%. This means the company is paying out more dividends than it's earning. Well, that's because of the last year, the earnings were impacted due to oil crisis, the COVID-19 and restrictions and travel restrictions across the globe. Obviously that impacted, but the company has a specific focus on giving high dividends to its shareholders. So that's why it's one of the companies that has safe investments and the safer options in terms of dividends. So that's.
To conclude on which companies to go for in terms of investment, well, I would say we have just shared our knowledge and our research and some ratings by analysts, whether which companies comes under buy zone and what kind of returns they've been paying historically, and what are the chances of capital gain if the market continues in the same direction. Now, this is not any kind of investment advice, but this video is just for entertainment purposes. However, when we actually look for companies in terms of putting our money in stocks, these companies, we do consider them with good potential, and if we invest in these companies, we will not be only getting good dividends, as we have discussed the payout ratios and the historical dividends, but also these companies are really strong in terms of giving payout to their shareholders. Also, we have also discussed some capital gains, which as an opportunity we do have in these companies. Although they are not all growth companies, they are companies which have great potential in terms of sharing their profits with their shareholders. So guys, thank you very much for watching our videos and liking our videos. And if you would like to invest in stocks, we have a link below. You can click on in that link, and you can join this platform which offers stocks in with zero commission and also with very competitive spreads. Thank you very much for liking us. If you haven't subscribed us yet, do subscribe us. Thank you very much.